Hello guys, welcome to the Trading Parrot. It's Saturday 3 p.m. UK time and I'm gonna do a very quick wrap up of the week looking at the price action on the 4-hour daily time frame and not just the usuals. Today we're also gonna be looking into a potential incoming weekly low quality breakout in the price action of Bitcoin, believe it or not. I'm gonna clarify some of the confusion of some people watching the videos, that they see me bullish in a time frame and they see me bearish in the other time frame, and they cannot comprehend. Particularly, there are some limitations of some people that cannot walk and chew gum at the same time. There are multiple time frames and you can be bullish on one, bearish on the other one. You can be right on one time frame and you achieve something in one direction while you're still on the opposite end on another time frame. That is just how trading works. So I'm going to try to clarify some of that. Where is my actual stance in case there was some misunderstanding there, particularly my video on Friday when I say I told you so. It created a little bit of a spark of emotions in some viewers that were confused, which I don't blame them. So I'm going to try to clarify that. If it's not your case, it's okay. You can still write down a comment down below, hit the like, subscribe, and show your appreciation that we are putting out a video on a Saturday. Alright, so what have we achieved this week? We have a little bit of a hiccup in here. Starting on Monday, we started to the downside. We went all the way up and we managed to re-enter the falling wedge. That was the bullish side. We were supposed to hold in here and we actually held for quite a long time. We were holding that 92 up until Thursday. It was just Friday that produced this puke. And this particular move down is the one that I was expecting to see. If you want, you can call it forecast. That's not what I do in this channel. I do not forecast anything. I just focus on high quality moves, so highly expected moves on certain time frames. For example, on the 4-hour, we were expecting to see a pullback, and we were even saying, my wishful thinking tells me that hopefully we close above 90. And on the daily time frame, we've been saying all week, hopefully we're gonna defend the most bullish upside, and we did. So we achieved both things. Unfortunately, it's very difficult for people to understand. On the 4-hour, I was expecting a pullback. I was expecting to hold 90. On the daily, I was expecting to defend the most bullish support at 38. So that is a call for upside on the daily, while I'm doing a call for downside on the 4-hour. And we hit both. Basically, we were right on both, but it's too much to have two forecasts, if you want to call it them forecasts, in two opposite direction and being on both right, so people get confused and they call you out saying, no, you were not right because you were bullish on the daily and we went down. Okay, I need to take 2 breaths before replying to those messages, because my first instinct is to tell them, my God, did you go to school, mate? It's just so ridiculous. Because basically at these highs of 50 RSI, we are expecting a bounce down. But that bounce down is confirmation that on the daily we still have some upside. Now that things are much more clear, I hope so. If not, just get a cup of coffee or, I don't know, hit your head against the wall, whatever makes the blood get into your neurons, so you understand the bidirectional thesis or the multi-time frame thesis, if you want. I think still the daily hasn't broken anything, okay? So there's a bunch of people out there that are started to get tempted to call all of this move up as a bear flag. And I do not blame them, because if you zoom out in here from the all-time high, all we have had is double bottoms followed by bear flag. Double bottom, bear flag, down. Bottom information, bear flag, down. So there is really a naked eye. There is nothing telling you there that there is an actual bottom information. You can see it a little bit on the price there, but with one eye, with the left eye, you look at this and you say, well, that's kind of a double bottom that broke out and it came back below the neckline. With the right eye, it tells you, no, that's a bear flag. It's disgusting. And that's where I use the momentum, because the momentum helps me filtering that out. It doesn't guarantee anything. There's no guarantees that even if you get those additional guarantees that you're gonna get it. This is an additional guarantee because this produce a pivot there, another one here. You could say that that thing breaking out in here on the daily, that is a fake out, okay? And that is a fake out that managed to move once up and it came back straight and put a new low. Full fake out, right? But where are we now with the momentum? Really, it's not doing the same thing so far. You cannot compare pears with apples. That fake out that we have in here on the daily on the 9th or 10th of November, it's fully confirmed as a fake out. It even went below the global support on the daily. But this guy in here is doing nothing but phenomenal in terms of momentum. So what can we say? Well, typically momentum precedes price. So price hasn't done something as magnificent as this. Price hasn't taken a high of 50 when the previous high was 46. We are not there yet. But thanks to this pinch above 50 and thanks to defending the 38, that intra-candle we touched at the end of the week, and not breaking below the most bullish support, what else can I say? Daily is still intact, okay? Calm, relax, and carry on, like they say here in the UK. Just continue breathing, okay? Everything that is going on the 4 hour is most of the time just noise. Now, on the CPR, yeah, it looks a little bit like a gray area because we have been rejected twice from the middle CPR pivot that is located around 94K. So that, yeah, okay, rejection. But for the bulls, which I'm currently, in a long, yeah, it's difficult to comprehend as well, but I don't want the price to go up for convenience, okay? I'll explain that, or you can watch some of my videos in the week to understand that situation. But basically, at the moment, we might be getting closer to form a triangle in here, okay? So we got this, which resistance has been already pinched, so that's a bearish thing, but let's ignore that for a second. And if I pretend that this is perfect, you get a triangle like this with higher lows and trying to break that resistance formed by the middle line of the CPR monthly. And that thing, by the way, I'm gonna save just so you guys can access this on my Telegram charts and you can request the latest version. That is the triangle I'm looking at, because we keep squeezing into that 92. We get rejections, but we don't put a new low. We still don't have new lows. So we are still within the ranging channel in there, and that potentially could indicate a more upside. Have we done our homework during the week? Yeah, we have some delta that went all the way to 600 eventually, and we have cleared it out. At the moment, we just have 80K, so we have balanced out liquidity up and down at close proximity of the price. So that's a recipe for now flipping a coin and saying, well, at least there's no more fire to bring the price any lower from this end, okay? There can be other motivations to go lower. Never hear me saying, oh, from liquidity, there's no more motivation on the short term. That's just one aspect out of a million, but it's an important one. And we need to always highlight that from that end, we shouldn't get any motivation to continue squashing the price to the lower end. In here, we have this liquidity below the price, but that is between 84 to 82K. So that area is heavy. So if we could say that now on the 15 minutes, this is a bear flag, if it breaks down, it probably can get into 83. Not necessarily the full chunk into 82, but maybe in one hit it can get to the 83. And we are on a weekend as well, so that's another consideration to have. Let's go and have a look at what price we close this week, and we actually close at 89,600 on Binance and 89.4 on CME. And that's interesting. That's a lower price on CME than on Binance. We don't get very frequently that the price is cheaper on CME. I don't think it's got to do anything with the outage that we had the Friday before, but it means that there is, the premium has come below Binance, so that means that there is less demand on CME at the moment. Well, that's bearish, but we know already Friday was a little bit bearish, the price action. So we got that potential triangle I already explained. We got on the 4 hour a lot of noise and ups and downs, and really 4 hour is not driving a lot. There is just this pending neckline here at 93 that we need to break above. There is, I was observing as well that we defended this line of 88,600. That was the previous high in here. So the structure, if we ignore that we came from here and that we could be within a bear flag, is still double bottom, and it could end up becoming some another structure. So if price comes back into 93,800 and it breaks out, you still have on the table that target of 107. Nothing has broken on the 4 hour that you can really state is 100% a loss. Let's call it, we're going straight to 74. And notice I'm telling you that, and I want the price to go to 74. I'm telling you that. So I'm not in any way I'm counting victory that we're going to get to 74, so I can fill my third order and be in a prime position to push into the upside. But I just sit and wait. Order book over the weekend, remember, tends to be thinner. Not necessarily today. We got 1.2, 1 point something below, constantly flipping, and 1K around. It's another chunk at around 95. So possibly, maybe we could get that spike into that liquidity that I just removed from the screening here. Let me see if I can show you that. It's always a challenge to scroll on mobile. Anyways, you can see it now. So that 95K is still the biggest. It's still bigger than anything even into the 70s. So I struggle to think that we are really going to go now into the 74, leaving that 95 just hanging from there. Now, if we go into the 95 over the weekend, that is something I don't want to see, or longs wouldn't want to see. Why? Because we are at 89,600 closed. We go to 95 and we create a 5K gap below, literally. That's not convenient. Anything bullish that we do this weekend creates a technical debt as a developer. Creates, technical debt, a chart technical debt, because we have to come back into 89.6. We don't have to, but we tend to close most gaps. So that's kind of the actual depth. If we go up, if we go lower, if we go over the weekend to 74, which I doubt is going to happen, then we leave a massive gap into almost 90. So that's a good motivation. And then we have that 95 that is huge. So we got two kind of bullet points to bring the price back above 90 later. So indeed, doing any business that we have to do on the lower end, is better to do it now over the weekend, leave those gaps, leave the liquidity on the top at 95, and then, reclaim, and nothing has happened. Amazing. That will be actually something I would like to see. Let's cover the weekly, let's cover the progress of the bear market, and then let's look at some news and yeah, in general, things that happened this week that are important. So we got on the weekly, now a confirmed from the previous week, we have a confirmed bullish cross on the stochastic RSI weekly. We can see it magnified. Let me see if I can magnify it. Yeah. So last weekend, that got confirmed there. So that's 24th of November. We are about to close a second week with opening even wider that mouth of the bull cross. We already have a bull crossing here, but we ended up putting lower low. So this will be second generation bullish cross weekly time frame. So I'm gonna show you something fun in here. Bear with me. So we have a breakout on that dotted line that happened 14th of April. And now we're producing a new one, but from a lower low on the RSI weekly within this massive channel that contains pretty much the full bull market, right? So the bull market starts from around here, we bottom in momentum, then we go up, then this is the channel of the downside on the weekly, and we have already broken the bullish support, which is 44. So where are we right now? We are right here, kind of doing a very cute and small quality, low quality breakout that could get confirmed this Sunday in a matter of one day. And upside, well, there's a range of upside into 64.86. I believe is kind of the peak. I'm not expecting more than 64.86 in terms of momentum. And if we really want to go bearish, a hit of 44 and goodbye. You know, goodbye. Get your snorkel because we're going to be swimming underwater for a long time if we go into 44 and we get an actual ugly rejection there. So we need to identify those levels in the price. Where is 64.86 in the price? Where is 44.21? And more importantly, if this channel is the channel to look at, this bear market, that 12 there, what the hell is that? And I'm going to explain to you why that 12 cannot really be considered not in a straight line to the downside. Price, pretty much physics do not allow to go to that 12 RSI on the weekly. I'll show you why. This is the previous bear market, right? So you can see the formation, you can see the touches of the top line, you can see how pronounced is the slope of that channel down relative to this one, which is a fatty one. It tends to go sideways, and we have already broken below that level, and we are kind of in this stage, breaking that 44 and looking for a dead cat bounce into the top. Here is at 56, in this channel is at 64. It depends. If it takes longer, it could be 62 or it could be 60, but that's already August 2026. So I'm not expecting a bounce like that in August. I'm expecting it to be now, December, January, no more than that. That's high likely, no guarantee, definitely not. So let's find these levels. And together with the 83 for those that are extremely bullish, for those that are saying we must pump in Q1, we must do a lot of massive things. So now let's go into the price. The people that are extremely bullish are talking about 269 if we go to that top of the RSI now, you know, which is crazy to do that now, but who knows? They got 0.000000001% chances, but they can still make it. I can still be wrong, absolutely. And then you got the 64, which is a push into 135.452. So that is another bull case if we really do that. And if we go just into the 44, that is 96K at the moment. You test that 96 and you get bye. Go home, go to the bear market. Now that 12, just for the fun, you wouldn't guess. Try to stop the video right now and write down in the comments, where do you think is RSI 12? Do it honestly, do not make up, do not watch the video because that doesn't make any sense, but let's see. I give you time, 1, 2, and 3. It's at minus 48,000. So yeah, literally, if in the next move of Bitcoin is only down and it needs to hit an RSI of 12, it needs to go to minus 48,000. And it's not a miscalculation. It's pretty much physically impossible to hit RSI 12 from the RSI where we are now on the weekly. And let's stop the geek stuff and let's continue with the monthly. Let me know in the comments if you found that interesting, and if you didn't, let me also know that. I really like nerd stuff, but well, that's me. Monthly RSI, we are halfway through bear market. We are at this level in here of 55 and we're expecting to get into 45. There's not much more if we continue previous past performance. And there's a chance that we, break this channel of bear markets being 1, 2, 3, 4, because also we already broke the top. We never made to 78. So some people are using this to forecast and say things like, well, there won't be as deep bear market, that we are very close to the bottom. Some people are saying, no, we are not going yet to bear market. We still have to first hit the top. I don't know how, but well, it could happen, but again, same probabilities I gave you before, very low. General markets have been okay. General markets did not puke. Only on Friday on the daily candle, you got on the S&P, this sort of rejection that could hint a potential incoming double top, okay? That is something that we need to assess, because on the weekly, we already have equal highs on the price and a channel down on the RSI, guys. This is a channel down with one high, lower high, third lower high. Okay. What else do you want? That's a channel down so far with lower lows as well, and price is going in the opposite direction. So it's exhausting at the moment, this rally. I'm not going to try to forecast anything on indices because it's just brutally difficult, but from the point of view of technicals, there's an exhaustion. It's very difficult because if they really print a crazy amount of money and they flip money into extremely cheap money, we could still see some additional upside. But the technicals are saying that in the current situation is almost not possible. But, sometimes by just printing trillions, sometimes some things can change in the charts as well. Let's have a look, because many people have been asking, what's going on with Bitcoin? Bitcoin is going down and everything is going up. Gold, equities, everything is going up and Bitcoin isn't. So there are two answers to that. Some people say, well, Bitcoin is going to catch up. There is at the moment a liquidity, there's a liquidation event at the moment that started from the 12th of October, and that flash of so many billions takes some time to cure the pain and to reverse, to form a bottom information, but eventually crypto will catch up. This is number one. And this is number two, is that crypto is an asset that generates a lot of fear, because people tend to escape crypto when there is a massive thing coming in, a storm, a bearish one, and they tend to upfront. It tends to be the first asset that they rug pull before there is a collapse. So if the second thesis is based on S&P potentially about to put a big top, a big crash, and Bitcoin is already on the defensive, starting that event, and then the opposite. S&P and Nasdaq will follow into that move together with gold and other assets, and also pull back next week. To be honest, I don't know. But let me read you a few things. Reports going into Friday note that bonds were weak, metals including gold were rallying, and equities were pushing towards highs, while Bitcoin was notably soft and failing to participate in the broader risk-on tone. Intraday commentary had BTC trading around the high 80s and 90s, down over the week. Several analyses this week frame 2025 as the first year in a decade where stocks are solidly up and Bitcoin is flat to down, highlighting that Bitcoin has decoupled negatively from equities after an early parabolic run in a record deleveraging wave in October-November. So there's gold up, Bitcoin down, narrative shift, people challenging that gold is the safe haven, being on stocks is the safe haven against a debasing currency, and Bitcoin was designed for that, but it's still not offering that sort of performance to confirm that it actually works. And that is causing a fight between two bands. The people that are bullish on Bitcoin, the people that are bearish, that say that it failed already. So let me know what you think in the comments. Do you think that Bitcoin failed as a safe haven? Or do you think it's on the way to improve that performance? I personally feel that it has failed. That's just my feeling. Remember, mindset trader, so I don't care if Bitcoin is worth $0 or $1 billion. I swing trade it from bear market to bull market. I trade it daily, I trade it weekly, I trade all the time frames, and I take advantage of understanding how it works, volatility and volume and everything. But fundamentals, the fundamentals of Bitcoin have decreased significantly, which I have covered many times in my videos. Anyways, I think it's good to do a wrap up right now. So, in a nutshell, the picture, the weekly doesn't look bullish until we reclaim that 44 RSI, okay? Weekly needs to reclaim 44 RSI. Otherwise, we are not talking. I'm not even wasting my time to say that Bitcoin is going to be bullish. That's step number one for weekly. Otherwise, it's bearish. Okay, 96K, and then it pukes and it goes 70, 60s. Daily hasn't broken at all. Daily is healthy. It has done everything that we wanted it to do to look shiny and amazing. Yeah, we defended the 38. We're still defending it. We break that, and we need to change narrative. We need to say daily, it has something broken. If we go for the 4 hour, well, there's plenty of noise. So I'm focusing mainly on the daily as a driver. And if we don't see anything broken there, we cannot really say that much. So I'm going to continue saying 4 hour needed to do a flush. That was the bearish time frame, and we did it on Friday. Check. Daily needed to defend that 38 to maintain the most bullish momentum so far, and it has put a new high relative to previous highs. Check. We are still bullish on the daily. Weekly looks ugly, okay? So it's ready for a reduced upside on the daily and potential new lows until we break back above 100K. Guys, I hope you enjoyed this video on a Saturday. It took longer than expected. If you did, hit the like, subscribe, write down a comment down below, and I'll see you on the next one. Bye-bye.